Okay, the weekly review has got to start with the Dow Jones Industrial Average because this is doing what we need all the other indexes to do. But this is just an index of 30 stocks here, but it's in a power trend where it's closed above the 21, for more than 10 days. The 10, the 21, and the 50 are stacked. But the thing about the Dow, after making low after low after low, a steady diet of lows, it made this bottom here and now has made higher lows. And most importantly, after trading through the 200 simple moving average, it has made a higher high above that August high, or it is August, right? July high. The high of 34,281. When was it? Yeah, August. Okay, so it's making new highs, higher lows, higher highs, definition of an uptrend. It's just one index though, and so we need the other indexes to follow through, and we can see that the S&P is really struggling with the 200 simple moving average, so that's not going to cut it. We're not out of the woods until it gets through there. It's got to power through there and stay above. The Nasdaq is really lagging, 4.7% below the 200 simple moving average. The Russell is doing a little bit better. It's above the 200 simple moving average, but still not out of the woods yet. And then the mid cap 200, it's above as well, and it looks a lot better. And this is kind of what we need to see the other indexes do. It's above this 463, so it's making higher lows and higher highs. So those are the 5 indexes that I'm looking at right now, and the Dow and the mid cap S&P mid cap 400, the only 2 that are really that have made the benchmark for us to go to green, the market conditions green, and just step on the gas. But I want to take a look at stocks because I like stocks, not indexes. And leading stocks like ENPH are showing no signs of bear market at all. This formed a base and broke out on Friday. It's a wild trader. You can see it sliced its 50 simple moving average a few times, but that's kind of what it does. First Solar is another stock in the group that trades a little more, you can see calmly. It's more of our calm child, not a wild child like ENPH. And it's just trending nice. You can see the power trend here, the 10, the 21, and the 50. And I'd like these types of stocks much better than ENPH. But, ENPH is performing well. ARRY, and a lot of eyeballs on this one because of the chart, this cup with handle, and it pulled back to the 21 and had a nice move, almost 9% on Friday. So that's definitely on our watch list. That's enough for the solar group. 2 or 3 stocks for each group is plenty. The next group that I want to take a look at is the electrical contractor manufacturing group, number 3 group. Sanmina here, one of the leaders, had this cup shape pattern, and it bolted out of that and formed a little shelf here, then gapped up on earnings and has formed another shelf, which tells me that, the institutions are not selling this stock. It pulled back close to its 21, but it's mostly been supported by the 10 there. Sanmina looks fine. JBL is another stock in this group. This one made a new high last week. It's extended, but showing strength. That's what we want to look for, is some strength. Flex, I know this one made another high last week. Yeah, then pulled back on Friday. That's not bad. Maybe it'll be supported by the 10 EMA now, but that group is a really strong group. I want to take a look at the networking group. Not sure what it's a number 6 group. Okay, a lot of these are extended. This one, I believe, is trading pretty tight though. Extreme Networks, you can see this one broke out of a base. Breakouts are working. I'm going to get to that in a little bit. ANET, this is on our watch list, but it's gotten kind of extended, pulled back Friday. So still near a buy point there. So that'll probably be on our watch list on Monday. And another one in the group, there's a really strong group here. DGII, there's a lot of them here. This is extended, but you can see it's just trading along its moving averages. And CELH is another one in the group that kind of gapped out and then pulled back. And then that's what I'm going to get to here in a minute. Pullbacks, breakouts and pullbacks. But first, I'm going to go to the random stocks. I'm going to get out of the group thing and just go to random stocks. This is ELF. The group is not strong, but it's a lone wolf and it's trading along its 10 EMA and just doing fine. Celsius, another one of our top stocks. This one to me is still in a base. I know it was trading tight within the base here, then gapped higher, pulled back to the 10 EMA, then gapped higher. On Friday, made a new high, but to me, this is still in a base and needs to handle out. I think this has a lot of upside potential here. AEHR, I bought this stock, I forget where I bought it. A lot of people were talking about, ran up to 23, then pulled back. And I think I bought it on the pullback, maybe around here, 20, 23. It's been working for me. I don't really like it though, because, the sales, 10 million in sales. I mean, Girl Scout cookies do more than 10 million in sales. Anyway, the stock's going higher. It's making us money, so I'm sticking with it. I'm not going to argue with Mr. Market, or I'm not going to argue with stocks. If they want to go higher, I'm all for it. This is AMLX. This one gapped higher on a drug approval. They're going to launch their drug in, I believe, Q1 2023. You can see right here, it made a high of 38.77 and then poked above the high last week. This thing's getting supported by its moving averages, and it looks like a really strong stock. Deere, I just wanted to show this stock because it's obviously a strong stock in a strong group. 14 out of 197, but it's had this short stroke pattern where it gapped up and then just pulled back less than 1%. Actually, it was up 1%, but didn't make a high above the prior high, 448.40. So it's done this before back here, and you can see how it responded before pulling back with the market. But that's usually a pretty positive pattern on Deere. I do not own it, but that looks pretty good. Okay, I want to talk about breakouts and pullbacks. Obviously, the breakouts are working. Here's Gilead breaking out, just moving higher. So people tell you breakouts don't work. Yes, they do. People have made a fortune buying breakouts. It hasn't worked in 2022, but it's starting to work. ROST stores, gap higher. I mean, there's a lot of them. I'm just going to go through 2 or 3 to just give you an example. This one hasn't even pulled back to its 10 EMA. AXSM Therapeutics, drug stock, gapped higher, and then now is just kind of trading sideways, letting the moving averages catch up. Which brings me to ATKR, which is an interesting stock. This is one I really like. I like it when stocks trade tight within a base, pulling back to a moving average and lighter volume. It gaps higher. So if you miss that, you say, oh, you see leaders up on volume or whatever, and put it on your watch list, then pulls back to the 10 EMA, boom, that's your chance. What happens then? It goes up, 16%. So if you miss that one, you still keep it on your watch list. It pulls back to its 10 EMA again at 115. Now, if you caught that, it's at 124. So this one's giving you a lot of opportunities. We're still within a base. So a lot going on there at ATKR. Dexcom is another one that I like, gapped up on earnings, now pulls back to a moving averages. We had this on our watch list. I don't know, some of you texted me or DM'd me and said that you like the stock and you bought a small position. So good luck with that. I own a little bit too. I bought on the pullback, but it's up. I think the buy point was around 113. It's up $5, so it's doing okay. Anyway, I'm going to go back to CELH because this had the gap up and the pullback. So it's giving you both now. The gaps hires, and if you don't catch the gaps, you just wait, watch, buy the pullback to moving averages, and when they bounce, that's when you catch them. Anyway, that's it for this week. Thanks for watching. At mcstockcharts.com, we never give up.